All right. Welcome to my little intersection of athletic science, traditional martial arts, and niche investing. This week I'm going to focus on the Barbell Row and also on a junior copper explorer which got a bit of press on YouTube this week. I put headers into the description so you can skip the commentary you don't care about. So starting with the junior explorer, I couldn't help but notice that a certain company got mentioned on 3 separate YouTube channels in the past 24 hours. There very well could be more, but I'm just mentioning what popped up on my feed. In one way or another, each channel disclosed a long interest in the company, as well as disclosing that they were making a paid promotion. So whether their long interest was part of their compensation or unrelated transaction is left open to interpretation. Figured I might as well take a look as well and see if I can throw my own disinterested 2 cents into the fold. I also hope to give y'all an idea of the bar that would need to be cleared in order for this mineral deposit to be proven large and high grade enough to justify building a mine. The company is called Starr Peak and it is listed on the TSX Venture Exchange as well as the over-the-counter markets. My disclosure is that I have no position in Starr Peak and have not been paid in any way for producing this video or compiling this research. However, I am a founder of Sunny Trike, which will be mentioned briefly later in this video. I will also mention that I see promotion as an inherent and important aspect of the mining industry because of how volatile it is and how short the windows of opportunity can be for pre-production mineral properties. So if we're going to think about an investment into the copper space, we should start by trying to form an opinion about where the copper market is headed in the coming 3, 5, and even 10 years. This metal is widely regarded as a bellwether for the global economy. On the one side, you have characters like mining magnate Robert Friedland, who has stated that the supply and demand picture for copper is like trying to force the Hoover Dam through a fire hose. He's saying that because of all the recent pledges from major automakers, as well as tardigrades like us at Sunny Trike, to electrify global transportation infrastructure in the coming decades. On the other side, you have the chart. You see Dr. Copper hitting resistance on his 200-day moving average at the beginning of June, and then this week testing resistance at a price level first breached in February 2021. So the school of thought that relies on technicals would call this a significant bear flag and suggest that the price is going down from here. In addition, if you check the IEA's copper demand projections, you'll see that in 2020, electricity networks, low-carbon power generation, EVs, and storage made up only 23.7% of global demand. I believe that this demand, the rest of this demand, comes primarily from real estate and construction. So the construction of new residential, commercial, and industrial facilities. So the future demand picture of copper demands very heavily on a strong real estate market. I'll give you a hint. Copper's predominant buyer in the global market rhymes with the state that houses the American hockey team called the Hurricanes. And this country is currently experiencing all sorts of defaults in its construction industry. Its government is also telegraphing plans to unleash a massive stimulus plan targeted towards infrastructure. If this does indeed play out, that would create demand or support and buoy demand for copper in the near term. So when I say near term, maybe 2 to 3 years, it looks to me that we'll be seeing a breakdown in copper demand and a downward pressure on the price. Demand certainly could pick up again in the medium to long term if the automakers and tardigrades mentioned above are able to make good on their electrification pledges. Given how much copper is required to build an EV, lower copper prices should lower the cost basis of the EVs themselves. So with this view of the demand side, what do we expect from the supply side, i.e. the major mining companies? So the U.S. Geological Survey's Copper Fact Book reported 21 million tons of production in 2022, which works out to an average of 2.7 year-over-year growth in the last 10 years. Global copper reserves are being reported at 880 megatons, which works out to around 42.7 years worth of reserves at current production levels. Please be mindful of the distinction between reserves and resources. Reserves are the part of a mineral resource that have been deemed economically viable according to a standard set of criteria like price that will be mentioned within the report where the numbers are being presented. A recent article by Royal Bank of Canada, which I've linked, suggested an upcoming oversupply scenario because of 3 mines that are expected to come online in late 2022, in addition to the possible breakdown in demand. So those 3 mines are the Quelavaco in Peru, the Timok in Serbia, and the Quebrada Blanca Phase 2 in Chile. The mineral showings at Starr Peak most closely resemble Timok. So if you're going to do some more serious research into this, then Timok would be a pretty important case study for you. The Timok will be an underground epithermal mine. So they are reporting a probable mineral reserve of 27 megaton at 3.3% copper and 2.1 grams per ton gold. So if we circle back to Starr Peak now, let's check them out. We want to keep in mind that the most obvious exit for a company like Starr Peak is to be bought out by a miner or a larger, better funded junior. So on their website, they show 3 properties in the Abitibi Greenstone Belt of northern Quebec, Canada. The properties are located around 1 kilometer west of the historic underground Normetal mine, which produced 10.1 million tons of 2.1% copper, 5.1% zinc, 0.54 grams per ton of gold, and 45 grams per ton of silver. This is about 1/3 of the size of Timok. Looking at their most recent investor presentation dated October 2021, I see they have not yet done a 43101 compliant resource estimate. That's a bit of a costly process and probably would not be undertaken until more holes have been drilled. The team appears to have lots of experience, so they probably have a sense of when the time is right for a formal estimation. So the fact that these guys are paying YouTubers to do promotion for them would make it pretty apparent that they're hunting for investors at the moment. Probably they're hoping to ramp up the drills even further. So let's see what kind of recent news they have to justify that. They had 2 articles about high-grade VMS drill intercepts, 1 article about signing a Toronto-based market maker, and 1 article about the exercising of all outstanding warrants. So these grades are kind of in the ballpark of what might make up something like a Timok. It'll just take more drilling to see how big of an area these high grades are seen over. They do have an independent qualified person, i.e. a geologist that's qualified to perform 43101 estimates. So it looks like they're all set on the compliance side in terms of doing the mineral estimations, right? So the article outlining the exercise of all outstanding warrants. I see that as a good thing. It's going to simplify the cap table for new investors coming in, and it'll remove the exposure to potential future dilution events when, if there were still options that could get exercised at a future date. I suspect, though, that with current marketing efforts, they're probably gunning for a private placement, so that warrants may very well be part of that package, so they may be back on the books by the time that the next annual report comes out for the fiscal year ended July 2022. Godspeed to those fellas, because that's coming up soon, and hopefully the markets are cooperative. All said, that's kind of all I've got. So hopefully this gives an idea of the bar that Starr Peak's deposits are going to need to clear for a successful exit here. It certainly is a gamble, but hey, I'm certainly not going to be the one who's going to try and talk you out of rolling the dice on a geologist. So there you go. So with that, let's move on to talking about the barbell row. The barbell row variation that I selected uses the narrowest grip available on the easy curl bar. This allows you to pull the weight towards your navel while keeping your wrist straight. The idea here is to work the push-pull aspect of punching that is prominent in Seibuken and Shorin-Ryu punches. Within this style, the retraction of your chambering hand adds to the power delivery of the punching hand and is one of the key techniques practiced within this style. So at higher weights, you'll notice a sort of chicken head bobbing that I do towards the top of the rep. Is that acceptable form? Well, in a pure bodybuilding or strength environment, it would be unacceptable. However, I can recall similar motions from more than one sensei or sifu who I've had the privilege to train with, mainly when setting stance. So the way I see it, my body recognizes a way to pull the weight more efficiently or effectively. So if I'm using this compound muscle set to trap an opponent's hand or to break their posture, then I want my body to use the form that will accomplish the objective most effectively. I'm sure there are counter arguments to this, but that's where my head is right now as I'm thinking and learning. So that's it for me. Hopefully the commentary here was helpful and or thought-provoking. Thanks very much for watching, and I'll see you in the next one. Cheers.